Hello everyone, welcome to my YouTube channel Indian Bull vs Bear. This is the 12th video of the series, The Final Missing Piece. In this series, I have tracked the past 10 years share price movement of top 10 companies of every prominent sector of Indian share market, and based on that, I have tried to identify some historical trends which could be helpful for every investor who are interested in those sectors. In today's video, I'll share my analysis of the capital goods electrical equipment sector. Please read the entire disclaimer carefully and subscribe to the channel if you haven't already, and comment, share, like and press the bell notification icon. The capital goods electrical equipment sector in India encompasses companies that manufacture electrical machinery and equipment essential for power generation, transmission, distribution and industrial applications. The sector is crucial for the country's infrastructure development and industrialization efforts. Government support this sector with the PLI scheme, the Production Linked Incentive Scheme. The government has introduced this scheme offering between $4 to $5 billion in incentives to companies producing electronic components locally, aiming to reduce the dependence on imports, particularly from China. There are few challenges though that the sector face, which includes dependence on imports and need for technological advancements. Despite being the world's fastest growing large economy, India faces challenges in fostering a robust manufacturing sector. Many items are still imported from countries like China due to lower production costs. In order to derive a historical trend or derive multiple historical trends, we'll see five graphs. First, yearly returns graph. The second will be the yearly swing graph, in which we'll see the number of positive and negative returns months in the last 10 years. Third will be the monthly returns graph. Fourth will be the mean monthly returns graph, in which I have taken the average of last 10 years return across every month. And the last graph will be the the monthly swing graph, which will show the number of positive and negative returns years. The top 10 companies of this sector comprises of 9 large cap and 1 mid cap companies. So before moving ahead, please be aware that for this video is only for educational purpose. There is no buy, hold or sell recommendation. Also, do not skip any portion of this video and watch it in full. You are going to learn a lot which will help you to take better investment decisions, that too on your own. So this is the first graph, yearly returns graph. This is the line graph with two lines. One is this blue line, which shows the yearly returns in percentage, and the second one is the orange line, which shows the cumulative yearly returns in percentage. So 2025 to start with 2015 was not a good year for this sector. It gave an average return of 6.5%. But 2016 was even worse, which gave negative returns of 16.49%. 2017 was a good year for the sector, and the sector gave positive returns of 25.22%. But 2018 again proved to be a not so good year for this sector with a negative returns of 30.94%. In 2019, again, the sector gave negative returns, this time 35.62% of negative returns. 2020 was a very good year for the sector with the positive returns of 50.17%. So as 2021, again a very good year for the sector with a positive returns of 109.92%. 2022 was also a good year for the sector with returns of 34.19%. 2023 was an exceptional year for this sector with the returns of 159.77%. And 2024 too was a very good year for the sector with yearly returns of 91.09%. So we can see clearly that From 2015 till 2019, the sector was going down, and from 2020 it actually starts to shoot up again. Let's move on to the next graph now. This is the yearly swing graph. In this graph, the green bar here shows the number of months with positive returns, whereas this red bar shows the number of months with negative returns. So in 2015, 6 months gave positive returns, whereas 6 months gave negative returns. In 2016, 5 gave positive returns. In 17, 7 gave positive returns. In 2018, 5 gave positive returns. In 2019, 5 gave positive returns. But then came 2020, 7 months out of 12 gave positive returns. In 2021, 10 gave positive returns. In 2022, 8 gave positive returns. In 2023, again 10 gave positive returns. And in 2024 as well, 10 months out of 12 gave positive returns. So let's put both of these graphs together and see what could be the takeaway from these two graphs. So the first takeaway is the cumulative return. So the cumulative return over last 10 years is 939.68%, that is 10x. So over the last 10 years, this sector has compounded investors' money by 10 times. And it is clear that more or less this sector started performing in last 5 years. So from 2020 onwards, this sector started giving positive returns. Okay, what else? The CAGR of this sector in the last 10 years is 26.38. So it's a very good CAGR, I would say. 3 net negative yearly returns. Now this is something which everyone should keep in mind. Though this sector seems to be giving a very good CAGR, a very good cumulative returns, there were actually 3 net yearly returns. So 3 years with net negative returns. Keep this in mind. The best year for this sector was 2023 with 159.77% yearly returns, although there were few others as well. For example, 2021 was also very good with 109.92% returns. And the worst year for this sector was 2019, in which it gave negative returns of 35.62%. Okay, let's move on to the next graph, which is the monthly returns graph. So this graph comprises of 12 smaller graphs, one graph each for every month. So for January, one for February and March and so on. In this graph, this green bars indicate the positive returns and the year, and the red bars indicate negative returns and the year. So January in last 10 years, this sector has returned positive, gave positive returns in 6 times out of 10. February also same, 6 times out of 10. March the situation improves and this sector gave positive returns 7 times out of 10. April even better, 8 times out of 10. Only 2 times it gave negative returns, or only 2 years it gave negative returns in the month of April. May seems to be an average month for the sector with 5 positive and 5 negative. So is June, again 5 positive, 5 negative. July seems to be a very good month for this sector, as in the last 10 years, only 2 times it gave negative returns and 8 times it gave positive returns in the month of July. August above average, 6 positive, 4 negative. September average, 5 positive, 5 negative. October seems to be a good month for this sector with 7 positive and 3 negative. November below average, 4 positive and 6 negative. And December just above average with 6 positive and 4 negative. Let's move on to the next graph, which is mean monthly returns graph. In this graph, I have taken the mean or the average of last 10 years return across every month. So one thing is quite clear from this graph is that September is the worst month for this sector, whereas there are months which seems to be doing very good in the sector. For example, April, the sector performs very well in April over the last 10 years. June with 4.15%, December with 3.84%. Let's see the last graph as well, which is the monthly swing graph. So January gave positive. So the sector gave positive returns in January 6 times, February again 6 times, March 7 times, April 8 times. May and June are average 5 positive each. July seems to be a very good month for the sector with 8 positive in last 10 years. August above average with 6. September average with 5 positive and 5 negative returns. October seems to be a good month with 7 positive. November seems to be not such a good month for this sector with 4 positive and 6 negative returns. And December the other way around with 6 positive and 4 negative. Now let's put these last two graphs together and see what can be deduced from them. So the cheaper months for this sector seems to be September for sure, but apart from September, probably March and February. So these are the cheaper months. January 2 can be included in this because January 2 has given less than 1%. It's okay. It's okay. And the costlier months include April, again the standout performer, 6.32%. June with 4.15%. July with 3.06%, but 8 times out of 10 it gave positive returns. October 3.08%, and December 3.84%. So I've presented all the graphs in front of you. I have shared my takeaways. Now you can deduce from these graphs on your own. You can find a pattern, and I hope that that pattern or those deductions would be helpful for you in your investment journey. That is all for today. Thanks for watching this video. Please subscribe to the channel, like and comment. I'll be back soon with another video. Goodbye for now.